All right, so let us actually complete some of our previous examples from the week prior. I think there were like 3 or 4. I think, obviously the way to learn is just repetition, repetition, repetition until you know it like the back of your hand. So obviously you guys cannot complain about more content. So let's get into it. Again, as always, pair and day up here, it will be the M5 time frame. So let us go. What is our first step? Well, obviously our first step is the build up. We're going to be looking for our build ups. If you can't identify the build ups, then you should stay away. What are our nicest build ups? Equal highs and lows, obviously. Channel, up channel, and then also sideways channel. These are the ones that we will focus on. Let us get it. So this one is fairly straightforward. We obviously have our up channel in Asia, and then within that up channel we obviously have our little minor channels as well. Inducement low, inducement high, pullback, boom, boom, induce it high, boom, boom, induce it low, come into the midline, very interesting. And then again, we channel to the upside, begin to build. What are these? Spot on. What timing is this? Exactly. And then again, we go into our channel. Wait a second. Oh, that's actually, sorry, the build up is here. That's actually our MM1. Okay, what do we know that this likely is, considering that we've induced high? Exactly. Come down and do what? Induce low with vector candles after our build up. And then again, give the reaction. Induce this right here. High, go into another build up. Induce this. While mitigating this, and then again build up into inducement, pullback, and then again build up, inducement, and end of day consolidation. So we can understand all of that. What is our next step? Well, our next step is going to be identifying our inducements. What do we know about inducements? Inducements should bring people in and take people out, and they should pretty much always contain vector candles. So let's give the example we always give. Right, we've pushed away. So sellers are in here, stop losses up here. We have our inducement, we vector high. The stop losses of the sellers are taken. Now we have the stop losses down here for these buyers, right? Then price will boom, and now both sides have been taken. So this initial inducement right here takes out the sellers and brings in the buyers. Perfect. So let's identify our inducements. Right, again, missed one here, just this little inducement high, and then vector, channel, inducement high again, we trade away, channel, inducement low, and then again we channel upwards, it'll build up, inducement high with what? Vector candles, of course, and then we come down, give a reaction from here. Just for future, we were obviously going to cover it in a couple of minutes, but why is this an SMT? We should all understand why this is an SMT at this point. And then again, we go into our little build up, induce down with vector candles, of course, pull back, induce high, come into this SMT. Now, why is this an SMT? You guys should understand that as well. We'll cover that in a little bit. Then again, build up, mitigation, induce the build up low for continuing higher. This all becomes liquidity. Here, no need to panic. This is just a false reaction. And then again, we're getting end of day and we go into this, run and close, gives a bit of a pullback, not really anything. Maybe you take this mitigation here. I'm not sure why you would. If you would, you probably take this down to here. So this would either be a loss or a break even, and then you're not really going to be trading this right here. All right, perfect. Next one is, of course, the optional one, which is break of structure. So where are our breaks of structure? Let's have a look. Our first one would obviously be here after we induce high in London Open, but realistically, are we going to take this mitigation here? I'll let you guys think about that one. And then again, we've got inducement low, break of structure high here. We come into this point of interest. I'm not going to say whether it's a mitigation zone or an SMT, and then we come back down, mitigate our inducement and continue higher. This would be your break of structure point. Unfortunately, we don't get another mitigation here. And then, yeah, these are your breaks of structure. As you can see, like I always say, they do tend to happen a little bit late. And you need to understand break of structure versus inducement, and also once you've had your break of structure, when this mitigation stops being valid or what validates it. These are questions that you sort of need to understand, and you'll get a better grips as we go further and further into the content and show you more and more examples. So we've had liquidity buildups, inducements, breaks of structure. What's next? Mitigations. Like I said, 3 candles, 4. I've drawn this awfully, but 3 candles to show our imbalance, and obviously our imbalance would be between here and here. Your actually mitigation zone would be your demand candle, or in this case supply, which will normally be like your last buy candle before the sell-off. There are multiple ways to choose your supply zones. It's whatever is comfortable with you that we showed in the basic master map on week 1. All right, so let's get into it. So obviously Asia, we're not really going to trade it, but inducement high. And then this is your mitigation. You can see why we choose the demand zones. Same thing, we have an inducement low. This becomes your mitigation. And if you see, this will actually be smart money trap. And why is that? Well, it lies on Asia high after we've induced to the low side. So we should definitely take this out. And then we have inducement high. If you're a bit more advanced, you can maybe take this mitigation here. If you're waiting for your break of structure, this would be the mitigation that you would look for. And then again, we induce low, come down, mitigate this point right here, but also we induce high right here, give our mitigation right here, and then continue to the downside. Obviously, you can only take this to this point. And then again, we have inducement. This would be the mitigation, but this misses. We go higher. And then you see again, we have our imbalance. This would be our mitigation. This would likely be break even, probably loss. This isn't really something that you want to take. But yes, that is our mitigations. So now you may have a couple questions. If this is an SMT, why did it give a reaction? Can I trade it? Is this mitigation valid if it's from a reaction from this SMT? And what you have to always think about is your mini cycles. So even though this is an SMT, what do we have coming into it? The vector candles, the inducement. We know, okay, it can probably give a reaction. Where do we expect that reaction to? To the downside right here, to our mitigation, before eventually going higher. So let's cover these SMTs. Why are they SMTs? Well, the first one should be pretty straightforward. we've got equal lows right here. So this is not a mitigation that you really ever want to take. The next one is obviously lying at Asia low. So we can expect this to be induced 9 out of 10 times. Like I always say, can it give a reaction? Can it work? Yeah, but it's the same way that a trend line can work. You don't really want to be betting on it in the long run. Okay, and then yeah, all the other SMTs make sense. Now that we've mitigated this inducement, you don't really want to be taking, oh sorry, that's before, never mind. But yeah, any like M1 stuff in here, obviously you don't want to take, or anything here you don't want to take now that we've mitigated this inducement to the downside without inducing anything significant to the upside. Perfect. So we've had liquidity buildups, inducements, breaks of structure, mitigation, SMTs. What is next? Timing. So this is what's going to like really validate your inducements, and it's going to be something that you really want to look into when you're looking for your inducements. Those vector candles are definitely going to be happening around these timings, and your timing based inducements will be the best inducements. So let's look at it. Exactly, Frankfurt open to the minute. This is actually a setup in and of itself. It's called we'll get into it later, but it's called Fast and Frank Turius. That is awful handwriting, and it's off the midline. So normally the way you want to actually, sorry, I'm getting too far ahead, don't want to go into that yet. And then obviously we have London open trap with our vector candles, very clean. Where are you targeting? At least Asia low. It depends what happens on the higher time frame, but you're at least going to partial at Asia low. And then again we have, so this is why this SMT right here gives a bit of a reaction. We can see we've vectored up into it at MM2, so we've got timing, we've induced, it's given enough to give us a reaction. Realistically, am I gonna personally take something from this? Not really. My ideal setup will obviously be the New York trap mitigation of this inducement right here, and that's all our timings. As you can see, the power of timing is very crazy. You can pretty much base your day around it, and when you're starting out, that's definitely something that I'd recommend, is to sort of base your day around the timings, because you know, if you're trading in between timings, things can get a little bit yucky. So next up, we obviously have our entry helper. Again, don't want to sound like I'm beating a dead horse, but this is always applied last. This is after your build up inducement mitigation. So let's see what we've got on the entry helper. So yeah, okay, we're trading away from this inducement. Here is our M1 let after this mitigation, but it's in Asia, so you're not really going to be trading that. Here again, if you really want to get into a position, you know, you've got your let confluence after your cycle. Yeah, okay, we can see that sort of. Again, not really something that I'd take, nothing too great, but these would be very nice. If you look, we're building equal highs. Let me actually get rid of all the other stuff. We're building equal highs, so everyone thinks like, just look at structure, right? High, low, higher, high. Sorry, higher, low, higher, high. Break of structure, and now everyone's seeing this. Sorry, everyone's seeing. Let me go back one. Everyone's seeing this as just a pullback to go lower, right? So when they see these equal highs, they're like, oh yeah, it holds, it holds, it holds. And then we get the, can't tell exactly what point it is. I think it's this one and this one here. EDM mitigation to go even higher. This is a very nice trade away from our inducement. Sorry, away from our inducement. This is obviously the mitigation of the inducement to go higher. So that all makes a lot of sense. that is obviously one of the ones that we have done previously. So let's go on to another one. Euro GBP on the 24th of May. This one can look a little bit more, complicated. Oh, why is this not the inducement to go lower? Stuff like this. But of course, we will cover all of that. What's first? As always, we need to identify our build-ups. So the first build-up, we start with Asia, of course, inducement low, and then you can even see, boom, inducement high, and then we're channeling. Perfect. What is this? Vector candle, inducement low. And then here, this is why we got you to do the continuation inducements as well, because look, we go into a build-up, we induce that build-up to the downside, likely timing, what is this? MM1. I'm sort of eyeballing it, so it might not be. And then again, channel to the downside, lovely vectors into inducement low, and then again channel to the upside, faking these equal highs. It holds, and then obviously we induce low in what timing? Exactly, New York trap, before again faking these equal highs one more time, coming up, inducing and continuing down, and then again lovely little sideways channel into inducement low, into again channel, into inducement low again. So what is the next step? Of course, we're going to go over all of the inducements. Let's do that right now. So like we said, we had an inducement high, and then yes, we did have an inducement low, but not in any significant timing. And then we can see, okay, we went into a lovely little build up before inducing low again at Frankfurt. And then we trade away from this. We come up, we obviously give the inducement high of Asia, channel into lovely little inducement low with nice vector candles. Then we come up, induce high, go into a channel, vector down, induce low, before obviously channeling up, building liquidity. What timing is this? Also building liquidity to the top side. This is really nice when you build liquidity in the direction you want to take the trade. I want you guys to really pay attention to that one. Obviously we induce low before vectoring up. Oh, it holds, of course. Lovely little momentum trap before taking out all the sellers and bringing in buyers, and then again going downwards, channel sideways, inducement low into inducement high. And obviously the thing is, this is end of day consolidation, so you're probably not going to be wanting to trade within any of this. Next up, we have our breaks of structure. As you can see, I don't want to constantly repeat myself, but this is a very good example of the breaks of structure happening late. Obviously, it allows you to get in this move. Great, love that. And then obviously you do have another little break of structure here, but no mitigation. And then again, inducement low, break of structure high. Realistically, are you going to be taking that for a target up here? Probably not. And then again, inducement low, inducement high, break of structure. Are you going to be taking anything? No, very late in the day. Maybe if London close comes up to here, you can take that to down here. That'd be a nice little trade. But other than that, there's not really too much to take if you're going to be waiting for your breaks of structure. But fortunately, it does allow you to get into this Mona Lisa trade. So next, we've had break of structure. Now we need to think, okay, but how are we entering? Well, we're using our mitigations, of course. So obviously, inducement high into mitigation. And then here we have sort of the Mona Lisa setup of the day. where you've got your inducement low with vector candles and then breaks of structure. M5 entry would be on this or even on this, doesn't really matter too much. And then you're away. At what point are you breaking even? Probably breaking even at Asia high. There's clearly something on the left. Target that. Maybe if you're wanting to secure some profits, you can secure some profits at Asia high. Yeah, and then again, we've got like these mitigations, which you can take, you know, maybe you're expecting it to come back to here. But obviously when you see, okay, we've had a build up, we've had an inducement to the downside with vector candles, we're probably not coming down all the way to here. You're like, okay, I've just taken this trade for 1 to 2. So probably not worth it. Same with this, right? Probably not worth it. Actually, I think we've missed a break of structure here. This would actually be break of structure. You could take this, but again, that's like 1 to 2 R. So probably not worth taking that one. And then again, this is end of day consolidation. So all of this, it's not really worth taking. Let's go to the next one, as I'm sure you guys are getting a little bit, not bored of the repetition, but there's no reason to hang around and explain it. I'm sure you guys are quite competent at all of this right now. So we're just going to give you lots of repetition again and again and again, same thing over and over and over. So SMTs, let's discuss why these would be SMTs. So this one's going to be an SMT because it's a Asia low, more so for like here, if you extend it outwards, maybe people are trying to take like this order flow, I don't know. Smart money traders are strange. And then obviously you have your inducement low within timing, Frankfurt. So this is obviously going to be an SMT, as will, you know, maybe like the M1 zone from over here, but obviously we're only showing on M5. Then here you've had your channel build up into your inducement low. So obviously all the smart money traders who are seeing like their little M1 BOS right here, they're getting trapped in this. That's going to be an FFS. Flows right through. And then again, after we've had our inducement low, these zones here, they're going to be SMTs, not going to be stuff that we want to take. And yeah, that is all our SMTs. All right, so what is next after SMTs? We have timing. So let's go into timing. Let's see when and where these inducements happen. Okay, so again, this one was very obvious. Frankfurt open to the minute. Can't really complain about that one. I thought that this one was MM1, but clearly not. This one here is New York trap. This would be very nice. Maybe there's like a nice little like M1 zone that you can take from that, but that would be like a little bit of an advanced one, but absolutely beautiful in terms of understanding like, okay, we've got these equal highs right here. We're definitely going to come and take them out. And that's exactly what we do. Obviously no London close or anything like that. So, okay, not too many timing based moves today, but that's fine. Obviously I want to show you every scenario, or don't just want to show you the days where it's perfect, right? Because when it's perfect, everyone can trade it, but when, you know, it's a little bit of a variation, people tend to get confused. So I think it's good to focus on the not so perfect days as well. And then obviously our entry helper, so we can see M5 again. I've shown you sort of all of them, but I want us to focus on the ones that are good. I don't want, you know, you want your build up, your inducement and your mitigation, and then you look at entry helper. So here, obviously the mitigation itself was an M5 and an M1 let. Sorry, this was the M1 let right here, this point here. So maybe that's your first entry, and that right there is your second entry. If you're wanting to get a little bit crazy with it, this is obviously how we begin to stack entries. Sorry, I don't know why I drew it like that. This is how we begin to stack entries, like so. Trading away from the trap. Again, we're not just randomly looking at the entry helper. No, we're using it where it makes sense. And then also you can see even though it is end of day, this still makes a lot of sense because you have your build up, your inducement, and your mitigation right here. But again, it's end of day, so we don't really expect price to go too far. I hope all of that makes a lot of sense. Let's go on to the next one. It's just that simple, right? So I'm sure another one won't hurt you guys. So this one was a bit more of a, this one was more of a, like an advanced example, and I'll show you why. Obviously, our first step is to identify the build-ups. That's always where we want to start. If you can't identify the build-ups, then just stay out of it, right? So build-ups within build-ups. As you can see, we've got a lovely channel to the upside. And within this channel, we've got build-up into inducement high, mitigation into another build-up into inducement low, to continue higher, and then one final sideways channel before we vector out. And London Open sets, that's not London Open, sorry, I'm so used to something like this being London Open. New York Trap sets the high of the day. So this is very, very nice, right? And then we can obviously see we have build up. Why could we expect that this right here is a false reaction? I'll let you guys think about that for a little bit, and then obviously end of day consolidation, we let price do its thing. So next things next, we obviously need to identify the inducements. So like I said, this is how you sort of ping pong. You mark out the larger build-ups within the day, and then you also mark out your little mini build-ups. But I don't expect any of you to be ping-ponging without putting in lots of effort. So obviously, to start off the day, we build these equal lows in Asia, and then we FU them. Very nice. So that's just very nice. We've got this inducement to trade away from, and then we go into build up, inducement high, induce this. Look how we build the equal highs. Oh yeah, it holds. Never mind. Vector through, so that's your inducement high into this mitigation. You can take that. Where are you taking that to? Well, if we sort of look at our inducements, this is very significant. Even though it is within Asia, we can see that many more people were bought in here than they were brought in here. So you're only going to be taking this for a pullback. Wouldn't really recommend trading like this until you're very confident. So we pull back, we vector through, look at that. And then we obviously remain within our overall build up before going to a little sideways build up pre New York Trap, and then obviously vectoring up in New York Trap. Then New York Trap sets high of the day. This, even though you're probably scoffing at this, that's like a 1 to 6, even just on M5. Don't even really have to go down to M1. Obviously we do, but it's not a necessity. If you're just wanting to take clean trades, you can just trade off the M5. Then here, we obviously expect this false reaction, but we know that we have induced this like point here. This is just a little internal minor inducement. So we induce that, it provides us with a pullback. We create a build up, give obviously on M1, this is going to be some kind of mitigation for what is that timing? And then obviously vectoring down, inducing Asia low. This is late in the day, but if you want to take an inducement trade like this, you can. Target where? Just target this little high. Again, I point it out every time, but notice how they fake the equal highs. Because look, structurally, high, low, lower low. So now they're expecting like bearish price action. And then obviously when we give the equal highs and we break this low, some people are going to be getting in. And then of course, what do? We just vector right through. This would also be like your smart money concepts decisional, as you've got literally decisional extreme. So you've only got 2 zones to choose from. As you can see, we come to neither. we fake the equal highs, induce high. Again, it's end of day, so we're not expecting anything too crazy. Next up is our breaks of structure. As you can see here, the breaks of structure are not that great. Again, this one isn't bad though, because we don't induce. Our next significant inducement point would be like up here. So, you know, you can maybe take something like this or go down into like M1 and refine. Maybe you can get in here. Maybe there's something on the entry elbow. But yeah, obviously this one, not too great because we've now induced something significant low. And then this one here, this is probably quite a significant inducement. So we need to be wary of like these mitigations up here. And yeah, this is probably quite a significant inducement. So we need to be like, if price comes up here, you'll want like additional confluences, maybe like build up beforehand, or let's say Asia builds up like this beforehand, and then we come in, get a lovely little mitigation at London Open for the next day. You know, you just want to sort of have these things in your mind. And then, yeah, this is an inducement, potentially a break of structure. You can see why I don't really trade break of structure, because you have a bit of difficulty identifying, oh, is this break of structure? Is this an inducement? But yeah, those are our breaks of structure. Next up, of course, we have our mitigations. So that's our first mitigation, of course, after our inducement low. This would be our next mitigation, but of course, price doesn't come. And then this would be our next mitigation after that. But of course, by that point, we've had a significant inducement high. Lovely little break of structure, probably M1 BOS right there, little internal BOS to trade the inducement. And then again, vectoring down, okay, we've induced this point, we've induced this point. We understand like, okay, this point should be taken because there's lots of liquidity, lots of people's SLs right there. So this is likely going to be a false reaction. We see timing, okay, timing's coming up, it's coming up to London close. You can tell there's something within this on the M1, and then you take that back down to this low, nice and simple. Again, if you take this, you're probably taking a break even. This is like out of our timing window, but in terms of understanding, it's very clean, and you can definitely look to sort of take stuff like this as you advance. I wouldn't recommend taking it at the beginning, but yeah. So again, after that, we have our SMTs. So it's very obvious why all of these are SMTs. Obviously, now that we've had a significant inducement high, this is just going to become liquidity, third tap of the trend line, all of that sort of stuff. And then also we've had an inducement high, so we expect at least us to come down and take this. So we would never look for a mitigation there. Well, that's actually a little bit untrue. You could potentially look for Asia bounce if this wasn't such a clean inducement, and let's say price did something like this. And you were actually trading into the inducement with Asia high bounce, you could trade it like that. But obviously now that we've had the inducement, we definitely expect this to get blown. And then same with this, we've had an inducement low, so this is going to be like let's look at structure from like a smart money perspective. High, low, high, lower low, lower high, lower low. What are they expecting? Again, another lower high to come down and form the lower low. So makes sense that this would be a smart money trap. And yeah, you shouldn't really be too confused about them. So next up, after smart money traps, what do we have? We have, of course, timing. So look, we have our, this one's a bit of a weird one because obviously the pretty significant inducement actually happened within Asia, but then London Open induces to the high side, MM1 induces to the downside, and then obviously you've got your New York trap inducement high, followed by your London close mitigation to finally complete the move that New York trap started, which is to come and take Asia low. I know that we've been going for quite a while, but I think there's just one more example. It's good to just get lots and lots of repetition in. But before that, we obviously have to go over the entry helper. How could the entry helper have helped us here? Well, it would have given us this M1 EDM here, as you see, boom, boom. So potentially you could take this as this is your demand candle, and maybe you've got here and you take it like that up to here before taking it down. Obviously this is a little bit more advanced because you'd actually be trading into the inducement. You can also see that this point here and this point here, especially this point here, gives us a nice M5 let. So you've had your build up, your inducement low, plus M5 let, everything's set for you to sort of take off. And then probably this would have been like the nicest entry if it just came back, filled this, and then went. That would have been the golden entry. So you've got to admit the simplicity approach is pretty good. So let's give us one final example. I believe there may be one more. I don't think so, but I'm pretty sure this will be the last one. So AUD on the 21st of June. This day was a beauty. I remember trading this day, and I think this is even on the edge actually. So you can go look on the edge to see how I personally traded this day. Obviously, first things first, we need to identify our build-ups. So we obviously have little equal highs, equal lows, channel, channel, sideways channel, little minor inducement, channel, and obviously inducement high to give the pullback. So these are our build-ups. Let's go into our inducements next. Last impulse to stop out the retailers, last impulse to make retailers open positions, and usually rapid price movement. That's obviously our vectors. So these inducements should be pretty straightforward. We've got our inducement low, but what does this also create? Equal lows. So this right here is probably not to be traded. You're much better off waiting for your inducement of these equal highs. We get that in London. Very nice vectors. If you're more advanced, you can take it right off of this. I remember on the day I marked this as a build up, and I had my limit right here. You'll be able to see all of this on the edge, of course. Price just missed, and this is what I mean by you should have alerts to know, like, okay, it's just missed my limit. Is there like still an opportunity for me to get in? And in this case there was. I think I like market executed here, put my stop above the final M1 what's the word? The final M1 like supply zone, and that was the first trade that I got in. The next trade was this EDM at MM2. This was very nice, especially because you know exactly what this is going to be. But again, getting a little bit far ahead of ourselves. First inducement with vector candles, but no timing. Next inducement, I believe this was at like 12:50 UK time, which is like 13:50 UTC +2. So just before New York Open, but obviously we can give a little bit of leeway, especially when we see the vector candles, right? And then build up. Again, we even fake out these equal highs. It holds, it holds, it holds. Inducement high, and then we just melt away and give our end of day consolidation. So next up is obviously our breaks of structure. Here, this would have been like the ideal trade. You've got your London Open inducement high, you're trapped to trade away from, and then boom, you get your M5 break of structure. This limit would have been gorgeous if it just got hit. And then here again, you've got your break of structure after the inducement, doesn't come back to fill the extreme, so you'd be waiting on entry helper confluences to get into this one. And then again, build up, inducement, high, into low, end of day consolidation. So let's look at our mitigations. Yeah, realistically, this isn't really something that you'd want to take, especially with the equal lows at Asia low. You'd need to be very wary of this, but these mitigations right here, beautiful. This one just misses, unfortunate, happens. This one you don't want to take. Why not? It's not really within timing. We want our inducements to be within timing. If you're going to take an inducement, like a mitigation of inducement outside of timing, where the inducement has happened outside of timing, you need to be very careful and very confident. You need to have lots of confluences, much more confluences than if it was within timing. And then again, build up, inducement, break of structure, but it's the end of the day. And realistically, if this comes up at the end of the day, it's probably not something you want to play. It's not going to give you the best of reaction. So next up, we have SMTs. All right, perfect. These should be very easy to identify. Why is this an SMT? Asia high. Why is this an SMT? It's against the most recent inducement high, which was in London Open, lots of vector candles. This is also the structural point, because look, low, high, higher, low, higher, high. This is where they're looking to buy to continue higher. And then of course we have our inducement low. So now, of course, structure has been broken to the downside. So now I'm going to sell from here. But again, we know this has come with very nice vector candles, and we are within the build up right here. So when we're in the build up and we give this false reaction, we know, okay, this is likely a false reaction to continue us higher. And then of course, once we have this inducement high, we expect this to be an SMT, not something that we want to trade. Not something that we want to trade. All right. Perfect. So that's SMTs. What is up next? Timing. So the timing is obviously going to give us nice inducements. Again, this was like pretty much pre-New York Open by like 5 or 10 minutes. So depending on your leniency, you can call this New York Open as well. New York Open. Open. Just open. So of course, London Open, lovely trap, lovely to trade away from. We love that, of course. And then here we had MM1. Again, I was quite confident that this was going to be an SMT. So even though this EDM right here, I'll show you it's an EDM. Oh no, I think I will. I'll show you it's an EDM. But yeah, it's quite risky. But like I said, I was in this position here and I was very confident of this coming down to here. Anyway, we're getting a bit far ahead of ourselves. You can see that live on the edge. And then, of course, New York trap. Then let's open the entry helper and see what additional confluences we could have had. So as you can see, the nicest confluence was the M1 EDM right here at New York, MM2. And then the other one, and I really want you guys to look out for these ones, is where your inducement itself is actually a let. This is very nice. When I first started trading the lit style, the style that I actually used was I tried to focus mainly on like understanding liquidity, and then the only entry technique that I had was if it was an inducement and then either the inducement was a let or there was a let that followed the inducement, I would then enter. And I literally did that for 3 months. And that in and of itself was, even though it was just with like a silly little 10K account, I think. Yeah, I think it was a silly little 10K FTMO account. It actually just put me on the FTMO leaderboard with something as simple as that. So that's something to think about. Simplicity, right? It's good. Simplicity approach, keep it simple. Perfect. Oh, we actually have another one. So I do think that this is the last one. No more, I promise. All right. So, oh yeah, I traded this day as well. I think I took this inducement buy, and then I took this one, and then I took this sell here to these lows. That was very nice. So what is our first step? As always, our first step is going to be identify your build-ups. So again, we have a bit bigger build-ups. We have build-ups within build-ups here. So channel, induce it low, induce it high, continue lower, and then obviously our main sideways build-up that you can see we built these equal lows, induced it with what? Vector candles, spot on. And then we got this channel, we induce this channel high, mitigate this point right here, go lower, form another channel, vector candles out of the channel, out of the like diagonal channel as well as the sideways channel. Perfect. So what is next? It's just to identify our inducements. So of course, sideways channel, induce it low, induce it high, both with speed, both with vectors. Beautiful. Then obviously we do have this little minor inducement of Asia low, and then we continue lower, channel lower into an inducement low before going into another little channel, inducing that channel low over here, but also possibly creating a sideways channel overall. We then come up and induce that channel high, mitigate this before creating another channel. So now we're in a channel within a channel. We induce that channel low with lots of vectors just after New York Trap. Would have obviously been very nice if it was within New York Trap. London close mitigates, and we're away, right? Obviously inducement high, but this is end of day, not really something that we're going to be looking to trade. Next up is identifying our breaks of structure. So as you can see here, they do tend to happen quite late. So obviously our break of structure point would be something like this, but by the time we come back up to this mitigation, we've already induced to the downside, and this no longer becomes something that we want to play. And by the time that we've had this inducement, break of structure, you know, maybe we want this mitigation or this mitigation, and price just is already flying. So I'm sure after me poking fun at it for quite a while, you guys can see why I personally do not trade break of structure. All right, so mitigation is next. Obviously, this is in Asia, so not something that we're really wanting to trade. This one could be valid because we haven't really had like an inducement high, but after this moves away, it's definitely best to just break even, because you're sort of within this overall channel, and you know, okay, this is maybe like SMT. After this break of structure here, this is maybe SMT, and we're going to take this out. All right, and next, obviously, this is what I took. Again, it is equal highs. You need to be a bit careful, but the cycle and everything validates it. Again, I was in these buys right here. Wait, where was it? I think it was like this. I think I was in these buys here, and then also one here, I think, right off the inducement. This was New York Open. That's why I took it. And then obviously close them out here. I'm not going to lie, with these buys initially, I did expect the high to be taken, but it's about reacting to what you see. And when I saw the vector candles, New York Open, mitigation, I closed these buys around here, entered sells around here, took that to the low, and then it would have been beautiful if I just took the London close buys up. And you can see how when you're reacting to things and you're letting the market come to you, it is beautiful. So next up, we need to identify our smart money traps. Obviously, Asia low, going to be a smart money trap. This one here, after we've induced low, it's going to be a smart money trap. Maybe you could get tricked with this one because you see like, oh, equal highs. So I want to buy to take this out. Maybe this one's a little bit forgivable, but it is still a smart money trap, as yes, this is an inducement, but it's still relative equal lows. And you can see we vector through it, take it all out, and then coming into London close, we give the lovely little mitigation before heading higher. So next up, we have timing. So obviously this is our Frankfurt Open, London Open. This is New York Open, and this is New York Trap. And then of course, London close mitigation to give the final buy of the day. Last but not least is our entry helper, and we can see here for our Frankfurt Open, we could actually potentially take this sell because it gives us the M1 EDM. Again, this is just a minor inducement. This is a bit more advanced though, and here you're actually trading into the inducement, which can be a little bit scary. But this London close buy is absolutely beautiful. You've had build up, inducement, and then for the mitigation, it's also a let. You cannot get nicer than that. Target here, and now it's end of day, so what do you expect? Just some consolidation. So that has been it for the entry helper, for the simplicity approach. Next week we will be adding I can't remember if it's next week or week 5. We'll actually be adding entries, so then we can really dig into it and we can really dissect it and just have some real fun with it. But yeah, here we've just, again, me Ruben Sekber, I've said it so many times, it's about repetition. See it until you can literally not see it anymore.